Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, February 1st through Friday, February 5th, 2010. Well, folks, we're going to do it all today. I have to say, we're going to go over the market from last week into this week. We're going to talk about next week, what to expect. We're going to take care of everything technically that's important in this market, and I want you guys to leave after watching this video gaining a little bit of a sense of what to expect in the coming week in this market. Let's first start with last week, folks. Wild week last week, absolutely off the charts. What we'll talk about here, folks, is a couple different things in regards to what happened. First of all, we know the economic data has been somewhat on the poor side of late, coming in less than expected. In addition, we can talk about key earnings reports that have just not been up to par. Remember, the market had rallied literally 70%, 80% off the lows from last March of 2009. And at that point, you literally have to shock the world, shock the markets to get the stock to continue to go up. And it just was not possible. That's what we saw. And then again, every time an earnings announcement came out, whether it was Microsoft last week or any of these other ones, Google from the previous week, the markets could not hold their gains. All right, sometimes the stock would start out up, but ultimately it would end lower, like Microsoft did last week. Take a look at that chart, folks. MSFT is the symbol. Here on Friday, after Thursday's earnings report, it actually had a solid report. The stock gapped higher and then just sold the rest of the day. The market conditions have definitely changed. You've seen a big change to the point where what you're now seeing, folks, is the opposite of what we saw for the last 10 months or so. Before, we used to see these earnings reports and the stocks just take off. Whether or not they gap down, they would somehow end positive. The same thing for the market. The market would start out negative, and then by the end of the day, buy programs would come in and push the market up. Now we're seeing the opposite. The markets are ending near their lows. That is a big deal because it shows a change in character that's taken place. Now, having said that, we know the week last week how it shaped up. Here's the 60-minute chart of the SPY. Let me punch that in. And what we saw last week, coming off of another dramatic move the previous week here, we saw a little bit of an up day on Monday, gave it up on Tuesday, a little bit of an up day on Wednesday, and then gave it up on Thursday, and then continuation on Friday. And what that shows you, folks, is when you have an up day and the next day it gives it up, it breaks the wills of the bulls. All right, so think about that. All right, you're a bull, right? And the market goes up one day, and then the next day it just gives it up. And then it goes up the next day again, and the next day it just gives it up. Eventually you throw in the towel, and that's what happened on Friday, okay? So you have the bulls basically saying, listen, we try to force a bounce out of this market. We just cannot do it. And then ultimately the market just rolls over and cascades down by Friday because the bulls step away and say, listen, I can't do it. I'm stepping away. And then all there's left is sellers. All right, there's no one left but sellers. That's why the market dumped out on Friday. Having said that, you came into some major technical levels on Friday that we think I will make you aware of. Now, again, these are master technical levels that I want you guys to be fully aware of going into next week because I think it could be something significant for this market. Again, we're looking at lower 107 area as being a key level of possible support, and I want to show you why. All right, so here again, folks, we have the beautiful MA pattern. You guys know MA patterns, or you should by now if you're somewhat technical. If not, you want to join in the Money Stocks Research Center to start to learn this kind of stuff. Up, down, up, down. We isolated this MA pattern as it was happening, said, guys, be careful. This is an MA pattern. This market could dump. There's your M. There's your A. MA pattern is played to the downside. There's your MA pattern playing out. Down it goes. That was totally expected. Then again, looking at the little bit of a bounce here, came back down to close down here. Another little bounce, then ultimately ended lower, and then down we go the next day. So again, here's Monday up, Tuesday down, Wednesday up, Thursday down, and Friday continuation as the bulls just gave up. That's how the last couple weeks has gone in this market, really since the beginning to mid portion of January 2010. The markets are now down about 7% on the year from where they ended, all right? Or from the highs, I should say, at the beginning of 2010, they're down about 7% from that 115 and change level down to about 107. Now, the key again going forward is, well, where are we on the charts overall? What's going to make or break this market? Well, see this level right down here? See this 107.40 level? That actually is a master level, and it takes a lot of analysis to kind of find these kind of things because most people are too lazy to do it. Now, for me, I've learned that these make me money. When I find these levels, they make me money. Therefore, I'm going to look for them because it's significant amounts of money. What I want you to do here is notice the 107.40 level. All right, so you have 107.40. What I want you to do is scan all the way back to November. Go back to November here and bring the chart into focus. And what you'll see right here, see this is the 107.40 level right over here. The tip of this gap from this high of this day to the gap up happens to be 107.40. In fact, right below that at 107.15, 107.13 is the gap fill portion of the close of that day. So what this is telling me is basically between 107 and 107.40, there's a lot of support in this market. Just so happens we closed right in this area. All right. Now, does this mean that we could go down and pierce this level a little bit on Monday? Yes, it's possible. Absolutely. But what I'm saying here, folks, is that you have a decent chance either after a gap down or a gap up and maybe a push down, a fluctuation of getting a bounce early in the week off of this level. So watch that very closely, okay? Now, again, if you move down, what's your next level going to be? You're going to have a little bit of a level right here at 106.75. And maybe that's, if we go down a little bit lower, the low level that we hit on Monday before we bounce. Now, again, we could even gap up on Monday and make a move. ExxonMobil's earnings are coming out on Monday morning. If those are significant, Exxon has a very big weighting in the S&P and in the Dow, and that would push the markets up. Again, those of you in the research center know what I kind of have an inkling about with Exxon, but anything can happen, of course. And again, we'll continue to follow that. But what I'm saying right around this area, anywhere in this area between 107.40 all the way maybe down to 106.75 or 70 right down here, look for major support to take place. See if this gap fill can hold. Now, again, as I said, it takes a lot of analysis and kind of scouting to show yourself that there's a major gap window right here, going all the way back to early November of 2009. Now, granted, you can go back even further and try to find new levels, but again, that would be the level that you're watching for on Monday or Tuesday to see if that holds, all right? Now, again, if you get below there, you're looking at that 106.70 level, and if you get below that, you're going all the way down to 106, and then the big move all the way down to this pivot low would be next. That would be at 104.75. If you break 104.75, you're going to go back to a master level, which is at 104 on the charts. These are all master levels. Now, let's talk some other analysis here. What if we get a bounce, which again is somewhat anticipated this week? If I had to guess for this week, folks, I say this week ends up on the week, and we can check back next weekend analysis video to see if I was correct. Now, if you do bounce, what's your levels going to be? First level, 108.30 to 108.35 right here. This is going to be some resistance. If you get through that, you're going to go to 109. If you get through that, you're going to go to 109.68, which is the lower Great Wall of China, and then the upper Great Wall at 110.34. These are all big levels on them charts. Follow them closely next week, as they will be in play. They will be utilized as short plays on the short-term swing trade or long plays on the short-term swing trade side, as well as day trades. All right, now that's what we're looking at. Just to show you guys on the daily chart, I want to just point this out. If you want to take a look and see exactly where that gap fill is, take a look at this. All right, right here, see this 107.40 level, 107.17, 107.15. This is that gap fill, so you can see it on the daily chart. We just about got there basically on Friday, and again, the question is now, do we see a little bit of a bounce off that level back to the upside? I would not be surprised if that does happen, but again, Monday will tell the tale. All right, now next week is a huge week. I want to get into a little bit of the analysis of on the kind of economic front for next week, because I do think it's significant. Next week, not only do we have ExxonMobil earnings on Monday morning before the bell opens, but you also have ISM numbers at 10 o'clock that day. You have personal income, personal spending numbers. That's not a big deal. But the big things, again, on Tuesday, pending home sales. Wednesday is huge. ADP employment change, folks. ADP numbers. ISM services on Wednesday at 10 o'clock. Crude inventories, of course. Thursday, initial claims. And Friday's the big day. Star Friday on your calendar. At 8:30 in the morning on Friday, you're going to get your unemployment rate and your non-farm payrolls. That is going to be huge, folks, all right? We need to see whether or not the unemployment rate has come down a little bit. Has it gone up a little? Where does it stand? And we're going to look for that. All right, so all these things are unbelievably key. Watch them closely. Watch key stocks. Again, I've highlighted tons of them in the hot charts and alerts over the past couple days that are coming into major supports. For those of you that are premium members, be ready to play those as short-term swing trades. They're there to be played, and that's why I'm posting them. Hot charts and alerts, Pro Trader Watch List, Daily Market Report. You name it, it's all included in the Research Center. I encourage you all to come learn, get guidance, get picks, make money in the Research Center. We'll talk to you soon. Take care.